Meanwhile, Labor frontbencher Richard Marles has told Sky News the collapse of thermal coal would be wonderful. The thermal coal industry last year earned Australia about $23 billion. Mr Marles, though, says the global market for the resource has collapsed.
But I think we know that without public money in this space, it's unlikely to go ahead. And that, I think, is the end of it. I mean, the global market for thermal coal has collapsed. And at one level, that's a good thing, because what that implies is that the world is acting in relation to climate change.
The collapse of thermal coal is a good thing, you say?
The global market for thermal coal, because what that implies is that the world is moving to more renewable energy sources.
Does that affect jobs in Australia quite significantly?
Oh, well, it just, what it means is that the economic case for opening up the Galilee Basin isn't now what it was a decade ago.
It comes as a split within broadly the Labor movement over the Adani coal mine deepens. The CFMEU is ramping up pressure for political support for the project in Queensland ahead of the election. Well, joining me now live, our first guest of the day, Liberal Senator James Paterson, for more on this and a few other points today. Thermal coal, this of course is the coal that generates electricity rather than coking coal. It is, presumably, over the next few decades, slowly going to die out.
Well, this is a really embarrassing gaffe by Richard Marles today, and I wouldn't be surprised if by the end of the day he retracts his comments or other Labor colleagues walk back his comments, because coal exports have been trading places with iron ore exports as Australia's #1 or #2 source of export income for many years now. Does Richard Marles seriously think it's a good thing that one of our major exports might be devalued? I think Australians working in those industries or working in industries that are reliant on that will be profoundly disturbed by that. They'll be particularly disturbed by that in Queensland, around central Queensland, Townsville, for example, where we've seen this week the CFMEU rightly calling out the Labor Party for being so anti-coal jobs.
It's interesting to note, for example, Germany has announced they'll be out of coal, I think within the next decade, completely out of coal for its electricity. Whilst we are certainly beneficiaries of coal exports and coking coal as well, we need to have an eye on the future, right, and be reading global markets to make sure we can transition in an orderly way and not be left high and dry.
Well, demand for coal has actually been remarkably strong over the last decade, despite all the predictions that it would fall. And there are coal-fired power stations being built all around the world, but particularly in Asia. So I think there's going to be opportunities for Australian export for years and years to come.
But is it still important? I take what you mean about, for example, India and China in particular. At some point, you'd imagine we're going to begin to hit that slowdown, right?
Well, I mean, only time will tell, and technology involves sometimes in unanticipated and unexpected ways. I wouldn't be writing off any industry prematurely, like Mr Marles has done today.
I want to talk about the RBA warning on housing, this slump in the pricing of houses around Australia. They're saying it hasn't hit the economy yet, but if it continues, it could well do. Important to note, this is happening on the Coalition's watch for all your warnings about Labor's tax changes.
That's right, and it's happening on our watch because people are anticipating what might happen if the Labor Party wins the election and if they introduce their negative gearing changes. And no less than the CEO of the ANZ Bank has confirmed that this morning in comments to the Financial Review. Investors are sophisticated. They're thinking about the long term. They know that there's sadly a risk of a Labor government winning the next election, and they know if negative gearing's abolished, that roughly 1/3 of the people that turn up to an auction to bid on houses will be out of the market. They will not be able to buy an existing home.
So you're putting the entire slump down to Labor.
Oh, I didn't say that, Tom, but it's definitely a very strong factor, underlying factor. I mean, the other commentators have pointed to lots of other factors like the Royal Commission, and that's certainly an important factor as well.
And, well, the other factor, wasn't it, that housing was unaffordable, which the government was talking about as well. So,
look, Tom, as a younger person, as someone who, of my generation, there are very few of my friends who have yet entered the housing market and have been able to afford to enter the housing market. The cost of housing is a very serious issue and a profound issue, but it's not going to be solved by negative gearing. That is not the way we should go about fixing this problem.
But you mentioned there are fewer investors at auctions. That means more people who are bidding not as investors but as owner-occupiers. So when you say it's not the solution, yet you're saying part of the impact will actually make it easier for an occupier.
Well, if you look at the sales data, one of the interesting things is, Tom, that in recent months, particularly in that final quarter leading up to December, loans to investors were down, but loans to owner-occupiers were also down. And that appears to be because the volume of sales has dropped significantly, because a lot of homeowners, sensing a weakness in the market, are holding off selling, resisting selling. Fair enough, you wouldn't want to sell in a falling market unless you had to. So we have a perverse set of circumstances where it's no good good for investors, it's no good for first home buyers, and it's no good for people who own homes. It's not working out for anyone, and that's the perfect storm that Labor's promised policy is causing.
For anyone wanting to get into the market as an owner-occupier, isn't the lower the market, the better?
Well, there are much better ways of addressing it than by smashing
Sure, but
housing
when you
investors.
say it's no good for them, perhaps some of them aren't willing to put up their hand, or they're not getting the credit, more importantly, because the whole issue with the Royal Commission and the banks being somewhat scared off.
Look, the availability of credit is no doubt an issue. That's been coming through very clearly in the data, that home loans appear to be taking longer to be granted, that when they are granted, they're for less money than it was a few years ago. Banks are being very cautious. One of the reasons why they're being very cautious is because the Labor Party, when they're in government, passed responsible lending laws that basically said it is the bank's responsibility if a borrower gets into trouble and can't pay their loan, and it's the bank's obligation to make sure that an individual is able to pay a loan. Now, that's a very interesting reversal of personal responsibility, and I think something that might be having unintended consequences.
So you'd want to reverse that?
I'm not saying that, Tom, but I just think we just have to be very cautious in this area, that when we do legislate for good intentions, that we're not causing unintended consequences in the process.
But are you saying that was a mistake?
No, I haven't said that, Tom. I'm just saying that generally in this area we have to be very careful about the impact of regulation, sometimes the unintended consequences of regulation.
Should that be looked at, that change?
I think we always have to carefully assess whether the regulations in the housing market and other markets are having the effect that we intend and hope them to have. And if they're having adverse impacts, if there's strong evidence of adverse impacts, of course we have to review that.
Because a big part of the Royal Commission appeared to be, for example, people on farming properties told, yeah, go ahead, have this loan, it's a good idea, and then getting in a lot of trouble and wanting to be able to take action against the banks. This law would enable them, presumably, to be able to take that action. If you take it away, they're going to struggle to.
Well, one of the other findings of the Royal Commission that came through very strongly in the interim report that was echoed in the final report is that one of the issues that we've had in the banking industry broadly is the complexity and the amount of regulation. We don't want to have needlessly complex or duplicative legislation. That's why I think it's very responsible and prudent that the government is taking action on all 76 recommendations of the Royal Commission, but we're not rushing to do so inappropriately. We're doing it in a timely way.
Not taking action yet, pledging to.
No, that's not fair, Tom. That's not fair. The Senate last week passed the first items of action from the Royal Commission. We've already passed a number of recommendations.
Okay, Labor is announcing measures that could be legislated. Other ones, they say, as soon as possible. One is focusing on insurance claims. At the moment, requirements to provide financial services efficiently, honestly and fairly, that requirement does not extend to insurance claims. Why should that exemption stay?
Well, I'd be interested to see the details of Labor's proposal. I mean, the reality is, Tom, they've actually only announced their response to a handful of the measures. There's still a whole lot that we don't know what they're proposing. And one of their proposals that they're proudly trumpeting this morning is that they're going to require the big bank CEOs to come to Parliament twice a year to testify. Well, I'm sure the big bank CEOs are trembling in their boots at the prospect of that, given that they already have to do so twice a year before the House Economics Committee. I mean, this is just showing how insincere and insubstantial the Labor Party's response
but what
to this
about
Royal
that
Commission has
particular
been.
point? Because you're looking right now at a situation up north where a lot of insurance claims are going to be coming in, and at the moment, as I say, this requirement to provide this service efficiently, honestly and fairly doesn't extend to claims. Isn't this an issue maybe that should be sorted out before, for example, Parliament might not sit until August?
Well, the government's not going to rush in its response to any of the recommendations. We're being prudent and sensible about the timeline. This is extremely complex legislation, and it would not be doing...
I guess the point is, though, why not rush towards some of them if, for example, this one is sitting there not addressed, and you might have people unable to get a claim done in Queensland?
Tom, I don't think rushing is ever a good idea when it comes to complex financial regulation. Getting it right is the right approach. Okay. We're not going to do any good for anyone if we get it wrong. We have to get it right.
Just finally and quickly, a lot of talk about milk prices. It seems this is the one thing the government wants people to pay more for.
Well, I'm a senator for Victoria, Tom, and in Victoria we have some of the most efficient and productive dairy farmers in Australia. In fact, I was speaking to a dairy farmer this morning about Labor's proposal for a floor price, and he was very concerned about that proposal and the impact it would have on consumers. At a time when people are struggling with the cost of living, I don't think we need legislation to drive up the cost of milk. And we know the disasters of previously regulated agriculture prices in Australia. When the wool industry had a regulated price in the 1990s, it was a disaster that took a decade to fix. Right. It was Paul Keating as Treasurer who brought an end to it.
So you've got no issue with dollar milk?
Look, I think ultimately that the prices are going to be set by the market, and we have to realise that as politicians...
That's what the market's done, though, and the government, and particularly Nationals, seem very exercised about it. You've got no issue? Let the market rip?
No, that's not what I'd say, Tom, but I think ham-fisted government interventions are not the answer either.
Senator James Paterson, we'll chat to you again next fortnight. Thank you.
Thanks, Tom.